What is up, guys? It is Joe Caruso here with another trade breakdown video. Now, this is a trade that I had called last week inside of the Trader Society Academy Discord, and we also got into it on the TSA live session. Now, I want to start off with the higher time frames and show you exactly why I was looking for sells on NASDAQ. In terms of price action on the weekly time frame, you could see that we are actually rather bullish. But if we take a look at our TDI down at the bottom over here, we could see that there was a Sharkfin. Sharkfin occurred, and then price hardly pulled back at all, but then it actually climbed a bit higher. So as price did the climb up after the Sharkfin, price goes up, our TDI actually went down, creating Sharkfin divergence. Now this occurred at a trend line touch on the weekly time frame as well. Now, this is a trend line in which I tried to find the area in which I can connect a starting point to where current price had hit and get the most touches out of it. So creating this trend line, it actually made sense that now we have a point of confluence for where the sell occurred. The Sharkfin divergence that's a momentum indicator letting you know that the reversal can happen. And the pinpointing of where is this area of structure on the weekly time frame, which I can now draw a little box around. There is resistance, support, and now being used as resistance again, as well as this trend line cutting through. So weekly time frame had Sharkfin turned divergence at a trend line. So it made sense that price dropped from there. Now, I didn't try to guess the top. I wasn't trying to trade against such bullish momentum. What I wanted to see was the pullback actually start and then look to get in on the continuation, knowing that I am now trading with a divergence on the weekly time frame. And typically a divergence on a weekly time frame will play out to hit the 50 moving average on that time frame. So if this trade completely plays out, we could see a rather large drop that can still occur. Or vice versa, the divergence can always create another top and climb a bit higher and hit a more confluent area before finally having that drop back down. So now when we go on to the daily time frame, I'm going to take off that trend line for a second to clear up the chart. Daily time frame. Let's get this centered. Like I said, I did not try to catch the top. I tried to let the initial move happen and get in at the earliest possible retest. Now, on the daily time frame, this is what I had wanted to see. The last area of structure before reversal happened is the zone in which I like to trade for a break and retest, meaning there was a resistance, it turned into a support. That support failed to create a higher high, making that area of structure the last structure used in the previous trend. So while it was bullish, it was the last support turned resistance before the reversal happened. So that area is where price failed to make a high. That was also that second touch of the trend line. So we had a trend line created, then we were able to draw that touch to center it, and then we had our target area. Now, support had broken on the daily time frame. The 50 MA had broken on the daily time frame. These are signifying that the weekly divergence is starting to play out. So notice how it started on the weekly with Sharkfin divergence. Then we noticed our daily dropping and clearing out support, clearing the 50 MA, dropping down to actually create a Sharkfin on the daily time frame at a daily level of structure. Support, resistance. Again, I can create a little box to show you that area in which it reacted at. That Sharkfin, very typical for a Sharkfin at the low or a divergence at the low. It could be a Sharkfin at the high or a divergence at the high. Anytime you have a confluent move, such as a Sharkfin or divergence at a high or at a low, the take profit for that move is essentially the 50 moving average in almost every scenario. So it made sense that we did not want to touch this daily Sharkfin. We did not want to touch it too early until it hit the 50 MA. So hence, My reason for targeting that area, again, the overall direction on the weekly signified the weekly Sharkfin divergence. Didn't try to guess the top. That's the momentum that I am trading with. I'm trading with the flip of a new trend, and our weekly signified that it was ready to drop. Now I can show you on the fib retracement that our entry was a perfect 618 fib retracement level. It was a trend line touch, a break retest of the daily 50, break and retest of structure in the start of a new trend. This is one of my favorite types of setups because it is not trying to guess the high. You are not going against the overall trend. You are waiting for a higher time frame to signify, to give you a signal that a reversal could happen. You let that move start to play out. Let the support be broken. Let the drop happen. And then you get in at the earliest possible retest to continue the move down. So now when we go to our 4-hour time frame, this was the time frame in which I called the trade. I took note of these higher time frame confluences, and then it was just a matter of waiting for price to actually get there. This is the original signal in which I sent the group a day or two before price had actually gotten there. I sent this out on, it was either Monday or Tuesday. The trade did not trigger until Wednesday into Thursday. Price actually hung around there from Wednesday night and into Thursday morning. So there was several candles in which on the 4-hour, you can see you had an opportunity to enter. Our 4-hour, you can see very clearly that 618 fib level. You could see that we have a shark fin at the 200 moving average. That was the entry. Shark fin at the 200 moving average, trend line touch, 618 fib level, structure, break retest of the daily 50, and going with a weekly shark fin divergence. These are essentially A trades, A plus trades. Weekly, daily, and 4-hour all lined up together. In fact, the daily and the 4-hour had a merging of confluences at the same exact spot. And the weekly was the time frame that gave the signal for the reversal, that said it was okay to sell now because there was shark fin divergence and it hit that trend line. Okay, there was a reason for a drop to happen. So as this was originally drawn up, it was almost a 1 to 5 risk to reward. Now, when the actual entry, when the time came to enter, I did adjust the coordinates for a slightly earlier take profit. As you can see, the original take profit that I sent, it actually just barely scraped it. It definitely nicked it. It went a little bit further. And this was based on this structure over here. Essentially, an order block was used as an exit, as I wanted to be out before we got into that area of support. But when we were in the trade, this dropped rather fast, as you can tell by the momentum of the candles. This was a 600-point move that occurred within from Thursday into Friday. So in about 24 hours, we saw NASDAQ shed 600 points. Although the take profit that I had given the group once we were in the trade was closer to this area, almost around 400 points. To be out at the touch of the 4-hour 50 moving average, still giving us a 1 to 3 risk to reward. That is super important because you don't ever want to destroy your risk to reward, especially on a trade that lines up on the daily, lines up on the 4-hour. As we can see, if we did hold it, which some members did, they got the full 1 to 5 risk to reward. An amazing trade, and I can't stress enough to you guys that the power that lies within less trades. Most traders do not understand that. It is how I've gotten to a point now where I am funded with $500,000. It's gotten me to the point where I have a copy trader with investor account hooked up. I've been net profitable on every single position I've taken on that investor account, to where certain positions may have lost, but on that same exact pair, the loss was recovered by another trade, basically meaning I've gotten early entries that I took small losses on, but then would capture the overall move with larger profit than the loss was, so I became net profitable on that position, even if the very first entry or two may have been a small loss. And I say that to show that I've gotten into the habit of taking less trades and quality trades. These are the kinds of trades that I call inside of Trader Society Academy. These are the kinds of trades that I personally take myself. Back in the day, I completely overtraded. So I really want to stress, even though this is a trade breakdown video, I did want to touch on the importance of the psychological aspect of not over trading, because less trades will make you more money. If this was the only trade, let's say they didn't take the full 1 to 5, they took the 1 to 3. If that was the only trade you took all week, you made 3R off of one trade. And essentially, we are calling several trades a week, still maintaining an 85 to 90% win rate on signals that we call. This strategy will change the way you trade, which will therefore change your life. Essentially, I'm saying this because it has done that for me. I would have never been able to achieve such good statistics or get as far as I have in my trading career had I not ever met Derek Vandelinder and partnered up with him to do TSA. But his strategy is out of this world. Even if you do trade a different way, incorporate how this method is, right? Incorporate some of the confluences and learn how to adapt them. It is, you will not regret it, because I don't know many other strategies out there that can have such high win rate and have such a perfect merging of confluences. You can understand how all of the trade breakdowns that I've done on YouTube so far, they've been trades that were basically an A setup, right? Or A plus, where daily and 4 hour lined up pretty much perfectly together. These trades don't happen every day. Sometimes they don't even happen once or twice a week. Sometimes they happen 2 to 3 times a week, because we look at every single pair. We look at commodities. We look at indices. Strategy works just as good. But the quality of how these trades will almost play out every single time, it is a matter of, can you be patient enough? Can you be patient enough to wait for a daily and a 4 hour to have the same, to both have a moving average in the same spot, a structure that you can identify, the overall trend, a trend line, fib retracement level? Waiting is the key. Patience is the key. Quality trades is the key factor here. So I will try to, again, do trades like this once a week or a couple times a month, doing these trade breakdowns on A trades only. I will maybe do videos where I can show you the separation of what is an A setup, what is a B setup, what is a C setup. And we really don't even look at anything that would be considered less than that. So make sure that you like and subscribe to my channel so you can get notifications whenever I update new stuff. Now that I moved to Florida, I will be much more active on YouTube. So thank you for taking the time to watch this video, and there are more like this coming your way. Thank you.